Good morning, everyone. I was hoping to see some more participants. I don't see them. Oh, there we go. We're starting to get them in. Thank you for joining us for our overview. I am Jacqueline Derrick Hurl. I am a payroll accountant for HR Payroll. My co-presenter today is Gail. Gail, if you want to introduce yourself.
Hi, my name is Gail. I am a accounting technician for HR Payroll. I'm responsible mainly for state classified personnel, but I also do processing for the supplemental pay.
And I'd also like to introduce Karina Carl. Karina is our newest team member for HR Payroll. She is an accounting tech 3. She's been here about a month, and she is learning the processing of the faculty and admin professional portion of the payroll. I believe that on your screen, she probably shows as Erin Malone. We have a couple of those. And I'd also like to thank Erin Malone, the real one, who is actually going to be moderating these. She's going to run our slides and watch our questions for us. So thank you, Erin, for that. We appreciate it. So if you go to the next slide. So I suppose I should move to the next slide too. There we go. So today we're going to cover the basics of summer session, supplemental pay, and 9/12 contracts. 3 different kinds of pay that are outside the norm of regular wages. And we'll cover some frequently asked questions on these 3 types of pay. If everyone's ready, we'll jump right into that. So what is summer session? So summer session appointments are used to pay faculty, admin professionals, graduate assistants, and other salaried employees. Other salary covers postdoctoral fellowships and vet interns and psychology interns who are either on a 9-month appointment or do not work during the academic year for work performed from May 16th through April 15th. So employees that are eligible for summer session appointment are those that are on a current 9-month assignment or will have a 9-month assignment in the coming fall semester. This includes our employees that are on a 9/12 contract. It also includes graduate assistants and admin professionals that are on a 9-month assignment and will be doing work during the summer for the same department. So when creating a summer session in Oracle for an existing employee, you always use the start date of March 16th of the current year. So this year would be, or I said March, I'm so sorry, May 16th of the current year. So this year would be May 16th, 2025. This is regardless of when the payments for the summer session may occur. So if you have someone who's working in the summer, you're only paying them in July. The summer session still starts on May 16th, 2025. When creating a summer session for a new hire, it's good practice to also use the date of May 16th. You can use the actual hire date, but by using May 16th, it encompasses if the employee can begin working at an earlier date, or if grant money becomes available earlier and they can start earlier. So our summer session limits, summer session payments are dispersed at the department's discretion as long as the payments fall within the following limits. There is no minimum payment for faculty or admin professional assignments. So if you want to pay someone $10 a month, there's no limit saying that you can't. But for our grad assistants, they must be paid the minimum of quarter time 25% of $705.50 per month, Or if they're half-time, a 50% FTE, they must receive a minimum of $1,411 a month. These amounts are out on the website, and I am sure that they will probably be updated when we have a minimum wage update as well. We haven't heard yet of when that will happen. Maximums for summer session are based on the number of weeks worked and the 9-month annual salary. To figure these amounts, you can run the personal file data summer session report to determine what the maximum employee can earn during the summer appointment, or multipliers are provided on the HR website. They are located at hrcolostate.edu/summer session. If an amount needs to be canceled, so for some reason the summer session, the person's not going to work 1 month or maybe the whole one, please change the amount field on the assignment to 0. Please do not delete the assignment, the appointment, which may have already processed, as this causes system issues behind the scenes. So we have what is called the auto base pay update. In HR, we refer to this as ABPU. CSU loves its acronyms. It is used to automatically increase the summer session pay amounts for July and August by the same percent increase of the 9-month salary as of July 1st. So if you have somebody who received $1,000 increase on their 9-month assignment, which was a 1% increase, you could apply that same 1% increase to their existing summer session. As you can see in the picture of the assignment change, there is a box labeled ABPU that can be checked if the increase is to be applied. HR payroll runs a one-time process in July that gathers all the ABPU increases and adds the amounts to the July and August payrolls. We only do it once, right before payroll runs. The amount shows on the employee's pay slips as retro summer session. Any changes made to the flag after that one-time process is run in July will not be picked up for any payroll. The additional amounts that would be requested would need to be entered as an assignment change or as a new summer session appointment in order to be paid. I know this can be kind of confusing. There is a frequently asked question document pertaining just to the ABPU that can be found on the website under summer session. And Erin, are there any questions before we switch over to supplemental pay?
I'm not seeing any out there yet, Jacqueline, so we can probably keep plugging away. And just a reminder to our attendees, you can drop any questions you have in the Q&A function of the webinar, and we can answer those as we go.
Thank you. So we'll go on to supplemental pay. And if anyone thinks of any questions, please put them in the chat and we'll be happy to answer them at the end.
All right. So really, what is supplemental pay? It is a non-base building temporary form of payment in addition to base pay. Really what that means is if an employee were to do work that is really outside the scope of their normal duties, this is where supplemental pay comes in. Like, for example, if I, as an accounting technician, were to design a poster at the request of the HR, I'm not a graphic designer, but that would qualify for something like supplemental pay. It's special assignments and duties lasting less than 1 year that require effort, both in degree and nature, that is in addition to the effort intended under the employee's regular assignment. It is only available for employees in non-student salaried positions, so hourly employees are not eligible. They must be fully approved by the 15th to ensure inclusion in the current month's payroll. Standard practice is for payments to be made through the regular payroll in order to safeguard the optimum taxation for the employee. Really what that means is while we can technically process supplemental pay outside of normal payroll, that incurs like our taxable, there's a 22% supplemental tax rate that must be implemented. Otherwise, if it's processed with the normal payroll, it'll be processed at whatever the employee has elected for their taxes via their W-4. And then supplemental pay is reported to the president's office monthly to ensure the best expenditure of university funds and talents. And then this is the supplemental pay form that's found on the HR website. The employee information and description of the work to be performed is entered on the form here. The work start and end date are also entered here. Payroll uses these dates to figure out how many months the supplemental pay should be included in the payroll. And this is the form continued. It's pretty long. The account and the amount of the supplemental pay are also entered on this form. The total amount intended should be included on this line. It's highlighted in the red there. The monthly amount will be calculated by us using the total in the amount space. So it should not be pre-calculated into a monthly amount for us, just because if a form comes in late or we weren't able to include it, we may have to change the monthly amount. Because the amount that we enter, it's not prorated based on partial months. So this is why the total amount should just be entered in. Otherwise, a lump sum will be paid on the same month as the date entered for the end date specifically. For example, if the work start date was March 15th and the work end date was like June 15th, the lump sum would be paid at the end of the month on the June 30th pay date. We only receive the form once all the routing is done. Unfortunately, we can't view any that are still routing to payroll. So if something ends up getting stuck somewhere on the line, we unfortunately can't view that. So, but is there any questions about supplemental pay?
I do see one question's come in, Gail. Someone is asking, could an option be added to the supplemental pay form to cancel the request?
If you're curious about canceling something that's like still in progress, that would probably be more of a question for HRIS if that's something they could add, or IT. But otherwise, unfortunately, since we don't have access to it until it fully gets to us, payroll isn't able to cancel it. However, if it's fully done and completed, and payroll does have the supplemental pay form, you can contact us directly to cancel it. We generally require that the employee knows. We'd like to get written permission from them just because it has gone through all the approvals. So we're going to make sure that they know and are aware if it needs to be canceled.
Thanks, Gail. That's the only question that was out there for supplemental pay.
Okay, then we'll move on to what is a 9/12 contract. Our academic and faculty and admin professional employees on full-time. And we consider full-time 50% FTE or greater may elect to sign a contract authorizing their pay to be paid out over 12 months. The 9-month assignment must run the academic year, August through May. It can't start in October or anything like that. It has to start as the academic year. The contract can be found on the HR website. It must be signed and returned to HR operations by August 1st in order to be processed for the current academic year. The first year, the August pay is deferred. It is saved in a savings account until May. So the employee does not see pay in August for that, only for the very first year. They'll see their first payment at the end of September. Any benefit premiums that were due for August would be added to the September payroll. So basically double deducts in September to make sure they are whole. Existing employees on 9/12 contracts that receive a pay increase on July 1st will not see that increase until the first payment of the start of the new 9/12 contract in September. So make that a little bit more clear. If you're already on a 9/12 contract, you're getting your August pay from what was saved through the academic year. And so therefore it's still the old amount, and your new amount will start on September 1st. New contracts and cancellations of existing contracts must be completed and submitted to HR operations by August 1st. So on the next slide is our 9/12 contract. It is on our website. It starts with the employee entering their name and CSU ID number. Then they initial the statement that says they understand there will not be any salary for the month of August in the first year on the payment plan. The contract goes on to explain that the contract will continue until the employee cancels the contract or it is withdrawn by CSU due to either termination, retirement, or they fall below the 50% full-time wages earned by the employee. So this can be due to leave. It can be due to family. It also states that the employee still has a 9-month appointment status. So just because they're on a 9/12 contract, it does not make them a 12-month employee. They're still a 9-month employee. So here's a breakdown of the 9-month salary and how it is paid out when an employee goes on a 9/12 contract. For those of you that love math, you'll love this. I'll try to make it as simple as possible. So the first month that they are on the 9/12 contract in August, they do not receive pay. So their 1/24th of their month's salary is held to make a full month in May. So it goes and sits in an account. And then 1/72nd of that is put into a savings account to pay for the summer months. For September through April, they are paid 1/12 of their salary, and 1/36 of their salary goes into that same savings account. And if you added 1/12 and 1/36, it equals 1/9 of their pay. In May, again, 1/24th and the 1/24th from August are added together to make that 1/12. And the 1/72nd from August that's already in the savings account, and the 1/72nd from May goes into the savings account to make up that 1/36. All that amounts in the savings account now equal 3 months of pay, 1/12. So 1/12 is paid out in June, 1/12 is paid out in July, and 1/12 is paid out in August. So this equals 100% of their salary. Next. So here are some frequently asked questions that we hear in payroll a lot. First of all is, will benefits be deducted from an employee's summer session? As I said, yes, they are deducted, or sorry, I'm still on 9 or 12s. Will they be deducted from a summer session? Benefit premiums are covered by the double deduct process in April and May. So they've already been covered. New hires that are hired during the summer that are benefits eligible will have benefits premiums deducted from their summer assignment. So a 9-month employee has already gone through the double deduct process. If for some reason their premiums were not deducted during that double deduct, the way Oracle reads our assignments is benefits can only go on the primary assignment, and that primary assignment is their 9-month. So they can't be moved to the summer session. And that's why we don't take them out of summer sessions for existing employees. It's just a system limitation. Now we'll let Gail answer the next one. Unless you'd like me to do it, Gail.
And what's the difference between supplemental pay and an award? An award is a payment for a specific program with guidelines and is open to everyone. Supplemental pay is for a specific employee for effort and duties that are not encompassed by their base position.
Thank you. And does an employee have to stay on a 9 or 12 contract once they begin? Again, another system limitation. 9 or over 12 contracts that are canceled by the employee must be done by August 1st. The contract can only be canceled during the contract year during those reasons we mentioned before of retirement, termination, or falling below the full-time working status due to leave or FTE change. Again, as I said, this is a system limitation. It's very cumbersome to have to reverse anything. So that's why we ask by August, so we can start new, fresh for the full year. May a transitional employee be on a 9 over 12 contract? The answer is no. Transitional employees are already on a contract for their transition, and they must take time off each year per that contract. Therefore, they do not meet the criteria of full-time for a 9 over 12 contract. And finally, we've had a lot of this come up lately. If an employee is on a 9 over 12 contract, will family impact their pay? And the answer is yes. Our system does not read family pay as regular wages because it does have different taxation rules. So it does not apply to your 9 over 12. So if an employee is on a 9 over 12 option and they begin receiving family payments, they have fallen below that full-time regular wages earned, and the contract will be canceled. Contract requires an employee to be receiving full-time working wages to be eligible. So do we have any questions?
I don't see any questions. We can give it a minute just to see if any kind of trickle in, but no questions in the Q&A as of now.
Okay. If you have any questions, if you think of them afterwards, because I know that's what I always do, waiting about an hour later, I'll say, oh, I really wish I'd asked. Please reach out to us. Our phone number is on this slide. Our website's on this slide. And you're more than welcome to come to our lovely new renovated offices. We'd like to show them off.
Jacqueline and Gail, we did have just one question come in
Sure.
regarding changes to these processes with Workday. I know a lot of that's still in development, but if you do have anything you can share at this point about what we know as of now for the impact of these processes with the Workday implementation in January, if there's anything you can share.
There will be impact with Workday. I know that the Workstate team has a wonderful rollout program, and so they will be sharing most of this information. I can say that 9 over 12s will continue in Workstate. There was a question at the beginning of whether they can be done or not, but they can be. So you'll see information of that coming out in the next few months, I'm assuming. So watch the coffee chats. There are demonstrations in the coffee chats, and the implementation team will also be rolling out information as well in the next few months.
Thank you.
No problem.
That's our only question as of now. So I don't know if you all want to give it a few more minutes,
Sure,
but that's
we
the
can
only
wait a
question
few
we
more
had.
minutes. We want to thank you all for coming. We really appreciate you and our team collaboration with everyone across campus. And I hope you all have a great day. I see people are dropping off, so I assume that we're done.
Yeah, I don't see any more questions. So thank you,
Yeah.
Gail and Jacqueline, for all this wonderful information.
Thank you for joining us.
Mhm.